CEI making that upside we were looking for before a retracement. Let's go ahead and find out exactly what can happen for the next session. What is up, you guys? Thank you so much for stopping by once again on this happy Monday. This is ARCa coming at you with a CEI technicals, raw price action, and statistical thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's go ahead and dive right into the charts. Okay, so we are looking at CEI on the 12-hour chart here, and this is the formation that we've been looking at. And now we did say yesterday that we have the potential of going up to well, actually it was in certainty that I wanted to see the 3.618 and the 4.236 be tested at about 11 cents in the first part of the analysis. In the second part of the analysis, we actually looked at the statistical side, and we did notice that we could potentially make a move to the upside since the conditions were already in place to about 12 cents, of which it looks like 14.96 or just about 15 cents of that was realized, followed by a capitulation. Okay, so now I am still looking at some downside continuation, just like we spoke of in the last video. So please, if you would like to prove me wrong, I would like for you to prove me wrong at the end of the trading session. Please don't bombard my my comments and saying that, well, this was wrong and you suck and blah blah blah. Like, just wait for it to play out, because please remember, I did say that the recovery could happen by the end of the day or the following session. Okay, in this instance, it still has not happened. We did face that first upside like we were talking about, and now we're literally coming on the way down. Okay, so just to be exact, you can actually see that the loss that we've incurred today at one point ended up at 30% loss from that 14.90 cent high. Okay, at the current moment at our aftermarket close, it's still at a 31.55% loss. Okay, so please, like I said, just wait for the end of the session and then see if it played out or not. Okay, because look at the time frames that I'm looking at. Okay, I'm usually looking at 12-hour, daily, 5 days. I'm even looking at the macro perspective on a monthly on this one. These moves are not going to play out before market opens in the first 36 minutes of the market aftermarket activity. Guys, give it a break. Okay, come on. I also know that I'm not perfect. I also know that I can get things very wrong. Okay, I don't have a crystal ball. It's just, I'm going to tell you what the charts are saying, and that's it. Okay, you guys, let's go ahead and just practice some patience, and we'll move along together and make the wise choices together. Okay, so as you can see, the retracement that we actually found came back to test the newly converted resistance into support from the broadening descending wedge that we actually called out just a few days ago. Now, this is, please remember that usually when we're looking at, let's count them. We have 1, 2, and 3. Yeah, we have 1, 2, and 3 tests of the resistance from both the descending channel and the wedge. So, if you remember, this is something that we talk about very often, the golden rule of 3. So usually after the third test of the resistance, we're looking at the biggest capitulation, okay? So there is a potential to where we can actually reclaim this channel. I'm talking about reclaiming the inside of the wedge, particularly, my apologies. And we can see that the 1.618 laying at about 77 cents or about 78 cents could be an area of interest, okay? So now, just in case, let's go ahead and pull up some moving averages to see if there's any confluent targets down there as well. Okay, so we just use our tools and see what we have. So you can see right here that the 10-day simple moving average is actually landing right at about the 2 fib at about, let's see, 82 cents. So there is now an area that we can use as support. Okay, so we take it from the top of the SMA 10 to about the 1.618 at 77, and you can see that this is an area that we can use for a potential bounce. We'll reclaim the inside of the wedge and then attempt at a true breakout to the upside. Okay, so this isn't the rule. Okay, so please know that there is the gap that we had here that was already, the gap that we have here on December 15th is already closed, obviously, with this massive candle, but it's also good to keep an eye on it for future play. Okay, so in this case, just if we were to make a quick little box right over here so that you can see, this gives us an extended area of support, and you can also notice that the wick high of the following candle on December 15th is very much incongruent with the 1 spot 272 at 73.40. Okay, so that's 7 cents. So 734. Okay, so so if I was saying the cents wrong, I'm sorry. I'm saying the 3 digits is because it's written in a long format so that we can be as precise as we can be. So in all reality, we could be looking at an overall range for a demand area that can range from 735, which is 7 cents, all the way up to the SMA 10 and the 2 spot 272 at about 856. Okay, so just about a cent wide, we can look at an area of relevant support. Okay, so now let's go ahead and move on to the next chart. So this is the macro perspective. We were looking at the potential downside happening to what we. Okay, so first of all, for the new viewers, since you haven't seen this, in order for us to imply where we may go, we have to actually understand where we were before, right? So if you can look at this formation in particular, this is a bearish formation, and it is called a right-angled ascending broadening wedge. And usually bearish formations respect the golden rule of 3 up to 3, okay? So in this case, usually the third test of the resistance presents the biggest shorting opportunity for short bias traders. Okay, so in this case, we can actually see that the price action has continued to the downside for quite some time, and the breakout and a price objective can be acquired by, the price objective can be acquired by taking a trend line from the top of the wedge to the very lowest point of the wedge and applying it to the downside where the true breakout actually happened, which could actually be right at this spinning top doji monthly candle that finally closed below the support line of the wedge itself. So we can see that the downside target is actually suggesting at about 380, 370, or 378, about 384, 3 cents. Okay, so and this could just. I'm saying that it's just. I'm saying that this is the playbook rules. Okay, I'm sorry for stuttering. I have a few things in my mind right now regarding the trade. So it's per the playbook rules. This is just usually how you trade this formation, and you look for the take profit usually upon that measurement that we took from the top of the trend line to the lowest part of the trend line. Okay, so another thing that we can see here is that the bottom side of this actually does have some confluence to where we're currently sitting right now. To use the bottom side of the falling wedge as a form of support before continuing on to the upside. Usually falling wedges like these tend to break out at about 70-75% to the apex of the triangle itself. Okay, so at this point we're looking at about 60-65%. I'm not saying that it can't break out from here. I'm just saying that it typically does break out between 70 and 75%, the apex being right down here. Okay. All right, so let's go ahead and move on to the next chart. So this is the statistical side of the analysis, of which we were looking at yesterday, and we did catch the potential of making a move to the upside of about 19.5%, and that move actually happened a lot faster than what we thought. But we can actually see that the conditions are about to reset upon entering the critical volatility zone, which I consider to be above this 90 percentile trend line here, or the 90% trend line. So anything within that 90 percentile would be critical volatility. Okay, so now since volatility is direction neutral, we actually pair it with an indicator similar to this one down here. So this one's proprietary to TradingView software, and it's called stochastic momentum. Okay. So if you wanna trade like me, use the tools that I'm using. Please refer to the link down below to where you can find the affiliate link for TradingView, as that will greatly help me in the future of my trading as well. Okay, so do know that we do speak of the ARC-Series indicators very often here. Know that in starting a subscription with TradingView, it actually does not allow access into the Crypstex indicators, okay? That is a separate subscription through an authorized retailer within TradingView, okay, you guys? So please know that the link for the TradingView, particularly the TradingView, is located down below, okay? So the back test was actually performed in the 12-hour chart throughout the entire trading history of CEI. Okay, so this is actually a back test that I perform by hand. So that we can gauge a deeper edge for the targets to come. So this is not me coming up with it myself. I'm not implying that these numbers are actually just my magic. It's actually just math, and math is telling us that there is a probability of this. So we have to consider the probabilities. The faster we start to look at the markets as a probability-based game, then the sooner we can actually start gaining. Okay, so in this case, the back test actually consisted of any time that volatility has reached that critical level we spoke of and started a contraction phase to the downside alongside stochastic momentum suggesting a continuation to the upside. We have taken note of that iteration's, let me just zoom in just a little bit for you. We have taken note of that iteration's duration. We have taken a note of the upside thrust based on that iteration, and also the amount of times that volatility versus momentum profile have guessed the upside correctly versus incorrectly. Okay, so that's why we have these vertical lines. Okay, so those metrics that came back are very interesting, and some of those metrics have already been realized to the upside, but it looks like we could be potentially setting up for another move to the upside, of which we can continue validating. Out of a total 44 iterations throughout the entire trading history of the CEI asset, particular to the 12-hour chart, we're looking at 29 iterations correctly guessed to the upside, and that gives us an average upside accuracy of 65.91% with an average upside thrust of 73.19.5%. Okay, so in this case, we did measure a potential lift to about 12 cents, of which 15 cents were made. Okay, so the upside thrust was absolutely met within literally a day. I did mention yesterday that I haven't actually made the back test for the duration, average duration actually, and I did mention that it could be around 8 days to about maybe 14, 15 days on average. Okay, so usually when that's really close in time or proximity, we can actually see that upside realized faster, sooner than later is what I'm trying to say. Okay, so now let's go ahead and move on to the last part of the analysis, and this is going to be the divergence chart. Okay, so divergences usually happen with price opposition to the momentum. Okay, so in this case, momentum represented by RSI, relative strength index. For the new viewers, the pink line represents a 14-day moving average, which is stuck to any RSI setup. Okay, the purple line represents the RSI signal itself. Okay, so in this case, since momentum is actually making a series of higher highs, and price action is making a series of higher lows, we can actually, or lower highs or whatever, higher lows. It gets confusing to say that all the time. So, but in this case, we are looking at several drives of hidden bearish divergence right over here. Okay, so what's happening is that some of these iterations are actually going through price action, creating them to be phantom drives of hidden bearish divergence. So phantom is just because we're going through price action to get from point A to point B. So that's what creates the phantom within the hidden bearish divergence. Okay, so it is in play, and we did catch it just now per the pivot that we actually faced at that 14.90 cent level at the top. Okay. And it looks like it's continuing on to the downside, and the 12-hour RSI is actually still suggesting that downside continuation. Okay, so let's go ahead and open up a multi-pane for the RSI so that we can get a deeper edge for the coming session and potentially the next session. Okay, so we're going to start off with the immediate short-term time frame, and that's going to be the 30-minute. Okay, so now for the new viewers, please refer to this diagram here that I've actually made for you. These are the RSI properties, and in particular to the properties, I want you to hone in on these 4 zones, as they will be spoken of very frequently. So these 4 zones are actually located right over here. For your convenience, they're just blown up. Okay, so the 30-minute immediate short-term time frame is still below the moving average, and the moving average being above us is actually not a good thing. It's usually a bearish thing. Okay, so but if you can see within the 30-minute that we've actually been in the shallow areas of the bear weakness percentile, which usually means a gravitational pull into the opposing zone is likely. So we actually just got rejected from the bull weakness. We actually came right back down. The likelihood of coming right back up and using the moving average as a form of resistance is likely in the next session, or maybe even in the early pre-market. Okay, so now we are looking at the bi-hourly RSI, and it is suggesting a downside continuation. However, the pivot is not as strong as it was once. Okay, so now that pivot is slowing down just a little bit. The moving average is approaching the RSI signal, which could indicate a potential continuation to the downside and a rejection from that moving average, okay, meaning a support. Okay, now the 6-hour RSI is suggesting a continuation onto the downside as well. It has reached now the very shallow areas of the bull weakness percentile, which only indicate a continuation to the downside, but it looks like the pivot is slowing down just a little bit, so we may actually get a soft landing per Jerome Powell, no pun intended. Okay, so in this case, the moving average is still way below us, so we may actually face a rejection from the junction between the bull weakness and the bear weakness on its own. Okay, so this is looking okay. It's not bad at all. Now, what is good is the daily time frame. As you can see, the daily time frame has since made a bullish cross above the moving average and is still suggesting an aggressive upside. And it is right at the junction between the bear weakness and the bull weakness. So this is likely to jump into bull weakness and continue on to the upside. Let's just look at the buy daily to see if we have any. Yep, very good thing here too. The buy daily has made a cross above the moving average, and it has reached the junction between the bear weakness and the bear strength. Okay, so now in this particular area, since we are at that junction, again, the gravitational pull is very likely to enter the following zone. Okay, so just for giggles, let's look at the 3-day. 3-day still suggesting some upside. It has now entered the very deep areas of the bear strength percentile. However, the pivot is still to the upside. So this is, this is still very much in accordance to what we're talking about. Potential pullback to let's see, to about 8.58, so 8 cents, 8.58, and 7.35, 7 cents. So 7.35, 8.58 is about my area of support between this area or at the top of the 8.58 cent level before a continuation onto the upside, since the statistics are still validated and are still in play. Okay, so yeah, I can potentially see a red day tomorrow for CEI before a recovery, and potentially on the next day. Okay, so what can invalidate this? FOMO. Psychology. So if this is just immediately buy, you know, then it'll probably do it. Okay, so just know that I'm giving you the playbook rules, and I am giving you what is per the norm. Okay, not including the psychology. So just know the difference, okay, you guys? So please, if you have any questions or concerns, don't hesitate to reach out to me on Twitter or Discord. Know that I am not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment. I need you to do your own DD, and everything will be just fine, guys. Okay, so with that said, I wish you well. I wish you a very good night, and I will catch you at the bell mañana. Adios.